Hi, you are welcome to my accounting channel. I will first introduce myself. My name is Daniel Amakon, an ACCA Chartered Accountant. I have provided accounting services such as bookkeeping and others, including teaching accounting for more than 20 years. Today's lesson is accounting, T format, and purchases. I don't want to waste your time, so let us get into the video. I have prepared this simple note for this particular lesson. I will explain it to you gradually so that at the end of the lesson, you really understand the subjects. So let us start. The T account format, purchases, payables, and return actual. They are the subjects that we are going to learn today. So our learning objectives is to understand A, the T account format, B, the meaning of purchases, C, payables, and D, return actuals. So the first lesson, the T account format. The T account shows the double entry nature of accounting. The left-hand side is the debit column, that's the receiver. And the right-hand side shows the credit column, that's what the giver. So this is the T account. The left-hand side, that is the debit column, and the right-hand side, the credit column. The correct format is that each side should indicate the date, details, and amount. So each side should show A, the date. The date means the date of the transaction. B, the details. That is where we can find the corresponding double entry account. And C, the amount involved. So this is the T format. The name of the account will be at the top. Then the left-hand side, it will show the date column, the details column, and the amount column. When we also come to the right-hand side, it also shows the date column, the details column, and the amount column. In accounting is a principle, and you have to practice a lot of questions. And as you keep on practicing the questions, you understand the principle and you become familiar with it. So in this particular lesson, we're going to practice a lot of questions. So our first question, on the 6th of June, Desmond bought stock of goods from Desmond Limited for $20,000 with cash. Record this in Desmond accounting records. So before we go on, accounting is a principle. And the first principle concerning accounting is the double entry system. The double entry system means that every transaction should be recorded twice. Why is it every transaction should be recorded twice? Because every transaction affects two accounts. So we don't have a single entry in account. We have a double entry because the transaction should be recorded twice. So every corresponding entry is as what? A corresponding debit entry. So we are going to, and there are steps to follow concerning the double entry system. So we are going to use those particular steps to answer this particular question. Please, I've already made a video for the double entry principle. So you can check below and click on the link to go and watch that particular video. It will really help you to understand the double entry system. So let us go on. So the solution to the above question is that the double entry principle, it says that A, the first step, identify the two accounts involved. In this particular lesson, we have I, the purchases account, and II, the cash account. Then after the second step is that you debit the account receiving cash. That's the purchases account, and credit the account giving out cash. That is the cash account. So the above question, the first step, according to the double entry principle, the first thing that you should do is that you have to identify the two accounts involved. And they are the purchases account and the cash account. Then the second step, after identify the two accounts involved, you have to debit the account receiving, in this case, the purchases account, and credit account giving account, that is the cash account. Then the third step is that you record in the T format. So let us look at the T format. So this is the T format. It shows the purchases account, and it has been what? Debited. The date column shows 6 June, meaning that the date of the transaction. The details column, it shows cash. Cash means the corresponding entry can be found in the cash account. And the amount column shows the amount for $20,000. So when we come to the cash account, it has to be credited. And we have the date column, 6 June, the date of the transaction, the details column, purchases, corresponding entry can be found in the purchases account, and the amount for $20,000. So let us go on. Our second lesson is what? The purchases. So accounting, when we say purchases, what's the meaning of purchases? In accounting, purchases means goods which the business buys with the purpose of selling. For example, if a business sells shares, if it buys shares and a computer, the shares will be classified as purchases and the computer as an asset, but not purchases. Let me explain. It simply means that purchases means that the goods that the business will buy with the intention of reselling the goods. That's what in accounting we call purchase. So for example, a company will buy 2 items, shares and computer. And if the company deals in shares, the shares will be regarded as what? Purchases, but the computer is regarded as assets and not purchases. So let us go. So example, the second example, on the 7th August, Watos Limited bought stock of goods from Metros for cash, 56,000. Record the transaction in Watos books. So the solution, use the double entry principle to answer the double entry principle, according to the double entry principle. The first step, that's A. First step, identify the 2 accounts involved, and they are what? I, the purchases account, I, the cash account. And the second step, that's B. The second step is that debit account receiving cash, the purchases account, and credit account giving us cash, that's the cash account. And the third step is that you record it in the T account. So let us look at the T account. So this is the T account. The purchase account first, it has to be debited. So when you come to the left-hand side, it has been debited. The date column shows the date of the transaction, which is 7th August. And the details column show cash, meaning corresponding entry can be found in the cash account, and the amount involved is what? $56,000. So when we come to the cash account, it has been credited. So on the right-hand side, shows dates, 7th August, details, purchases, corresponding entry can be found in the purchase account, and the amount for $56,000. Let us look at the third example. So example 3, on the 10th August, Watos bought a car from Autos Limited for cash, $80,000. In Watos accounting records, the transaction will appear as follows. Use the double entry principle to answer it. A, the first step is that you identify the 2 accounts involved, and they are I, the car account is an asset, and I, the cash account. Then the second step, debit the account receiving cash, that is the car account, and credit the account giving out cash, that is the cash account. So after identify the 2 accounts, then the next step is that you have to debit the account receiving cash, which is the car account, and you have to credit the account giving out cash, which is the cash account. So the test is that you record in the T account. So let us look at the T account. The car account first, it has to be debited. So under the date column, 10th August, date indicating the date of the transaction, details column, cash, because the corresponding entry can be found in the cash account, and the amount involved, 80,000. Then the cash account has to be credited. You have dates, 10th August, the date of the transaction, details, because corresponding entry can be found in the cash account, and the amount involved, 80,000. So the explanation is, in Watos accounting record, the car, which is an asset, has been debited with $80,000, and the cash account credited with the same amount. However, comparing transaction A And B, it can be seen that though the stock and car were purchases made by Watos Limited, stock has been debited in the purchases account and the car debited in the asset account. This is because stock are the product that Watos deals in. So as I said, once Watos Limited bought 2 items, 1 stock and 1 car, but because he deals in that particular stock, the stock account should be what? Purchases account should be debited. The car, though is purchased, but it's what? It's an asset, but not purchase, so we have to what? Also be debited. Okay. Now we go to our third lesson. Payables. So accounting, when we say payables, what is the meaning? A payable is anyone. It can be a person or organization that a business purchases an item from, but payment made in a later date. That is a person or organization to whom money is owed for goods supplied. Let me explain. Most of the time, a company may buy an item, and when the company purchases the item, either the company can pay for it cash immediately, or the payment will be made at another date. Once the payment is made at another date, the company or the organization will owe the person that they purchased the item from. In accounting, because the company is owing the person, because payment will be made at another date, we call it payables. So let us continue. So for all our transactions, it has been made for by cash. Now let us look at an example where, so we are going to look at what happens when the item purchase is made for. Sorry. So I'll go over again. So we are going to look at what happens when the item purchase is not paid for immediately. Sorry. So our example 4, on the 11th May, Brown Limited bought goods from Amo for $35,000, paying at a later date. Record the transaction in Brown Limited books. So we use the double entry principle to record the solution. A, first step, identify the 2 accounts involved, and they are the purchases account and Amo account. B, the second step, debit the account receiving cash, that the purchases account, and credit the account giving account, that is Amo account. Then the third step, record it in the T account. So you realize that because the payment was made at a later date and not paid immediately for, Amo account will be shown because Mr. Brown is owing Amo. Supposing Mr. Brown had paid for it immediately, then the cash account would rather be recorded instead of Amo account, but payment was made at another date. So let us continue. So we have the purchases account, a T format. It has to be debited, and we have at the debit side, which is the left-hand side. The date column, 11th May, is the date of the transaction, and the details column, Amo. The corresponding entry will be found in Amo's account because Mr. Brown is owing Amo. Payment was made at a later date, and the amount column shows 35,000. So when we come to Mr. Amo account, we have to be credited. Dates, 11th May, details, purchases, amount about 35,000 because payment was not made for immediately. So as I said, Brown Limited has debited purchases account with $35,000. And because the goods were bought without payment, Amo, who has become a payable and his name has appeared in Brown's account records and credited with $35,000 instead of the cash account, as I've said. We go on to the fifth example. So example 5, on the 15th of May, Brown bought a printer from Datu Limited for $50,000 on credit. Show the entries in the Brown accounting record. So the solution, the double entry principle. First step, identify the two accounts involved, the printer account, which is an asset, and Datu account, because payment was not made for immediately. So the company is owing Datu, so the Datu account should be recorded, but not the cash account. So the second step, debit the account receiving cash, that's the printer account, and credit the account giving out cash, that's Datu account. Then the third step, record it in the T account. So we look at the T account. The printer account first, it had to be debited. So on the left-hand side, it has been debited. It shows the date column, 15th May, date of the transaction. The details column, Datu, because the corresponding entry we found in Datu account because the amount was not paid for immediately, and the amount involved is $50,000. So we come to Datu account, they have to be credited. It shows the dates, 15th May, details, printer, corresponding entry can be found in the printer account, and the amount involved $50,000. Datu account because the amount has not been paid for, so it cannot be recorded in the cash account, but rather Datu account. So explanation. As I said, Brown Limited has debited printer account. The printer is an asset to Brown Limited with the amount of what, $50,000, and credited Datu account with the same amount because the printer has not yet been paid for, as I said. So our last lesson for goods return. When we say goods return in accounting, what's the meaning? At times, goods bought by a business may be returned due to many reasons, such as wrong goods being supplied. In accounting, we call this return at loss. So let me explain. At times, when the company purchases goods and the good, they receive the good, they realize that the goods either has been damaged, or some of the goods have been damaged, or the wrong goods has been supplied. Then they have to return the goods. When they return it in account, we call it return at loss. So a return at loss account will be recorded. So let us look at an example. So example 6. If on the 16th of May, Brown Limited returned 5,000 goods to Amo, the accounting records of Brown Limited will be as follows. The solution, the double entry principle. The first step, identify the two accounts involved is the Amo account and return at loss account. Return at loss account, and the goods are being returned to Mr. Amo, which is the $5,000 goods. Then the next step, the second step, debit the account receiving cash, Amo account, and credit the account giving out cash, that's the return at loss account. Then the third step, we record it in the T account. So first, the return at loss account, because they are returning the good back to Mr. Amo, it shows that the date column shows 16 May, and the details column Amo, because the goods is being returned back to Mr. Amo, and the amount will involve $5,000. So let us look at Mr. Amo's account. Mr. Amo's account has been what? Debited with the amount, because what Mr. Amo is receiving the goods. So we come to the dates. 16 May, details ROA, meaning return at loss account. That's where the corresponding entry will be found. And the amount involved is what? $5,000. First, when the goods were purchased from Mr. Amo, it was what? It was credited because he was giving out the goods, and the goods that he gave out was $35,000, and $5,000 has been returned to him. So let us see. So in Brown Limited accounting record, return at loss account has been credited because Brown is giving the goods out to Mr. Amo with what? We have been debited with what? $5,000. And the Amo account has been debited with $5,000 because Amo is receiving the goods. The actual amount Brown Limited is now owing Amo is now $30,000. Why? It was $35,000 purchased from Mr. Mo, but $5,000 was what was returned to him. So we have come to the end of our lesson. Now let us go to what we learned today. The learning outcomes are: one, you know, A, how to create a T account format. B, the meaning of purchases. C, the meaning of payables. And D, what is a return artworks? And E, how to record purchases, payables, and return artworks. So we have come to the end of the lesson. Thank you very much for watching. For watching this particular video. Please like and share in order for you to encourage me. And also comment so that I can improve upon my performance. And please subscribe so that future weekly videos can be sent to you. Please go over the video, watch the video several times. As I said, accounting is a principle. And as you watch it several times, you really understand it and be familiar with the concept. Also, practice more questions. Practice more questions because what? More questions because accounting is a principle. And as the saying goes, practice make man perfect. So look for more questions to practice. If you need more questions, you can contact me and I can give you more questions. And as I said, I'm a chartered accountant. So you can contact me for bookkeeping or any other accounting services. Also, if you need a teacher, accounting teacher, you can also contact me so that I can discuss with you what concerning providing you other teaching services or bookkeeping service or services or any other accounting services. You can contact me by my email below. Thank you very much for watching. See you in my next lesson. What else for my next lesson? Because every week I'm going to record a video on any accounting subject. Thank you very much. See you.